Good afternoon, or for our friends out on the left coast, still good morning. Welcome to the penultimate session of Trade Ahead Talks. This is a series of informal conversations to help businesses and government officials in Western Canada get a jump on trade issues that we know with some degree of certainty will be coming in the year ahead. I'm Carlo Dade, the Director of the Trade and Investment Center at the Canada West Foundation, and it's indeed a pleasure to have you along with our partners and colleagues from across Western Canada. I'll introduce their partners and colleagues after our key speaker today. We'd also like to start out by thanking Export Development Canada, a great partner and supporter of Canada West and a partner of our partner organizations across Western Canada on the trade front. Today, we're talking about an issue that is absolutely critical for us in Western Canada. We have arguably in Canada, and certainly in the West, privileged trade access with some of our key markets, a new trade agreement with the United States. We have access to over 8 markets in Asia in a version of NAFTA that extends around the Pacific Rim. As opposed to the Americans, we also have a trade agreement with Europeans. But market access and customers who want what we have, rising global demand for what we produce, doesn't mean anything if we can't get goods to market or if our customers don't believe we can get goods to market. And certainly Canada's rankings at the World Economic Forum and at the World Bank Logistics Index indicates that our customers are telling us that we have issues on the trade front. So today, what we'd like to do is dive into not the deeper work that Canada West has been doing for the past 8 years, 10 years on trying to fix the structural issues with how we prioritize and understand trade infrastructure, but we'd like to share with you some of the learnings from this ongoing research. Our key speaker today, John Law, is in constant contact with stakeholders, consultations, interviews to support our work on how to solve Canada's trade infrastructure problems. And John's going to be able to share some of those learnings with you today. By way of introduction, and I've worked with John for 8 years, and I'm still reading the introductions. John was Deputy Minister in Saskatchewan for the Ministry of Highways and Infrastructure. He was also the chair of the Canadian Council of Deputy Ministers responsible for transportation and infrastructure, president of the Transportation Association of Canada, and he was also the founding head of the Global Transportation Hub in Regina. So someone with deep knowledge of Western Canada, but also deep knowledge of the transportation and logistics structures and systems in Canada. And I should note for our partners that in terms of being a representative of Western Canada, John was born in Edmonton. He worked for the Blue Bombers back when the idea of Blue Bombers having a Grey Cup ring was, well, just an idea. And of course, he's been in Saskatchewan ever since. So a true Western Canadian, a good friend and colleague, John Law.
Thanks, Carlo. I won't get into the CFL dialogue right away, but we can always go there if people want to. Let me just say that I'm very pleased to be able to talk about the topic here today. I think it's a really important one for us as a country and for Western Canada in particular. Trade is just so important for us that, and people know the stats well. It accounts for about 2/3 of our national economy in terms of GDP, about evenly divided between imports and exports. That's a big chunk of our economy. And we've gone through some arguably transformative changes in the last period of time. So with an effort to try and get to a discussion about what sort of trade and supply chain signals we might want to look for in 21 and 22, I thought it might be worthwhile for us to start by reviewing where we've been in the lead up to the pandemic and in the years prior. And I'd like to do this in sort of three chunks. Initially, I'd like to talk about Canadian trade and globalization in the last decade, because that, for us in Western Canada in particular, has been a really important feature of how we have seen growth take place, not only for large companies, but for SMEs in Western Canada. We've witnessed, annual growth in exports and imports of about 4.5% annually over the last decade. And it's been a little different depending on which markets you look at. Despite some declines in the last half of that time frame in the US, we're still at about 4.6% growth with the United States, 6% with China. And so there have been real benefits here for Canadian companies and Western Canadian companies in terms of globalization on the basis of expanding their customer base for exports, and also the sources from which they draw inputs for some of the production activities that we rely upon here in Western Canada. The one point that I want to make, because I think it's one we may want to come back to around this, is that this internationalization of markets has had the kind of unintended consequence of increasing our supply chain vulnerability. If you think about the number of touch points that we have as a result of the expansion, it just kind of puts us on the higher end of the spectrum in that regard. The second sort of time frame I want to flag here is just if we think about the last 3 years, I think we can describe that time frame as having maybe a new lack or a new level of unpredictability for Canada, which I think in some ways compares to what we've seen in the last 3 decades. So we've really seen an acceleration of some of the challenges there. Think about this in the context of our predominant trade partner to the south and the reaction that I think many of us had to what was a protectionist policy regime under the Trump administration that had most of us kind of not sure what to expect next, including unexpected tariffs, a forced renegotiation of the North American Free Trade Agreement. These were pretty fundamental shifts with our trade partner to the south, which has for a long time been a privileged relationship, one where we've enjoyed some advantages. So I think that was a significant, if you think about the Trump administration, that was a significant change. On top of that, if you think about what you were just talking about in your introduction, Carlo, there's just been a rapid acceleration of competition for the international share of the trade pie that Canada has historically occupied. Think only about our relationship with the United States and that for Canada, the first time in our history, we've been replaced as the biggest trader with the United States by China in this same period of time. So we've seen a lot of things happen. You can reflect upon China by itself as well. Think about the arbitrary restrictions on Canadian food products that came to play that also forced us to rethink, supply chain metrics and how we were going to manage that relationship. And then if we sort of look closer to home, even before COVID arrived, we had a series of domestic issues to manage. If you think about the rail blockades, some of the labor disruptions, these also had dramatic impacts on the fluidity of our trade corridors. So there was a lot going on in this space. Now jump ahead to COVID. And there's a lot to talk about here and a lot that's still yet to be clear in terms of the implications, but there are at least 3 notable factors here that I think really have contributed to the largest and fastest decline in international trade flows in modern history. And the first of those has to do with the stop and go of cargo traffic on an international level. And I'll talk about that in a minute. The second is that we're starting to witness what have been, at least in the short term, new patterns of consumer spending. And then third, we've seen record freight rates and a changing market relationship between shippers and carriers that I think has accounted for a good part of that. So just a quick comment on some of these different phases of the pandemic. This was really not a single event initiative that we've had to deal with. It's actually happened to us in phases. If you think about it in that way, the first phase came when China shut down. And that had a significant impact in terms of putting a major dent into the exports and imports flowing in and out of the country. Second phase, China reopens and everybody scrambles to reload cargo and stuff starts to flow again. But by the time that happens, we get to a third phase of the pandemic where now North America, Europe, South America, India are all now themselves having to deal with different shutdown implications associated with that. And as a result of that, we see major congestion issues in a variety of different ports for different reasons starting to show up in different places around the globe, and for Canada in particular. If you look at the West Coast where we had port traffic down by 30%, and you see some major changes here that have started to contribute to a significant challenge in terms of how to manage freight flows and transportation implications for things like moving people around the globe. Followed that with, I think, was another kind of surprising or changing set of circumstances that we hadn't seen before that has to do with consumer spending. We all were faced with circumstances where we weren't going to restaurants, we weren't going to, like for me, nightclubs, and for others, they're just a variety. We're not getting haircuts, right, Carlos? So these are things that we're not spending money on. But what happens is that ahead of anybody really predicting it, people start to, spend money on things like, gardening equipment at home gym stuff, and we're starting to see different kinds of activity become the norm that nobody really was in a position to anticipate. And so this also, if you think about it, things like container volume requirements are often driven by consumer spending, and where we should have expected to see significant downward trends in terms of consumer spendings or a negative growth scenario. In fact, what happened was, and nobody anticipated this, we saw major new demands in new categories of activity that were completely different than we had seen in the previous 30 years. And then add to that the scenario in which we've had to deal with high freight rates, caused in part by the boom in demand, but also by bottleneck effects, which if you look at it, going into 2020, there was virtually zero demand growth anticipated. All trade sectors were anticipated to be relatively weak. And as such, over the last 30 years, if that market was weak like that, you would expect that carriers wouldn't be able to raise freight rates. And yet, very early on in 2020, what did we see? But the rates sort of took off. And there were a number of factors associated with it, but part of that had to do with just a different environment in terms of the relationship between carriers and shippers. And carriers were actually able to pass along not only increased costs for things like fuel, but to respond to some shortages of demand. At the same time, another significant factor, China made a real concerted effort to repatriate as many containers as possible, which also had an impact on cost and availability. And so a lot of those containers that we might otherwise have expected to have access to got sucked out of Canada. And no matter which way you look at it or which aspects of this challenge in terms of supply chain management, whether it be demand, whether it's freight rates, or whether it's capacity management, all of the kinds of things that we've seen associated with the pandemic are really unprecedented. So if we think now about, so what can we expect going into 2021? I just want to come back to where I started the discussion and suggest that how we manage supply chains going into 2021 and 2022 depends very much on what expectations you have about the future of globalization and free trade. That's been such a big part of what we've seen in terms of growth for Canadian businesses. There have been a lot of obituaries written about free trade and globalization as a result of the pandemic, but the most recent forecasts are suggesting, I think, that despite what are unquestionably dramatic impacts in some of the categories that have benefited from globalization, we shouldn't expect that, that means that things are going to come to a drastic halt as far as free trade is concerned. One of the things that has happened is that supply chains have come back to the top of the agenda. Folks are looking at some new approaches that may reshape supply chain patterns. And the key trade-related debate here is, will companies and countries seek greater safety in terms of international diversification, or will they try to foster more domestic self-sufficiency? And, I think there's a ways to go before we can answer those questions. But I think it's safe to say that 2020 is likely to be the low point for many trade metrics. And depending on how deep the plunge really goes, how fast can we expect to recover, in terms of global flows, and how might future trade patterns look differently than they do compared to what happened in the past? So I've for purposes of getting the discussion going, I thought I would throw out 4 or 5 things that I think are probably relevant for us to think about going into 2021 to avoid sort of missing some of the cues that may have been available to us in the last year. The first thing is that the most recent forecasts that I've been looking at suggest that trade growth is expected to grow again in the second half of 2021. After about a 10.2% reduction in 2020 of total export volumes, they're now suggesting, if you look at the Conference Board numbers, that we should see a bounce back of maybe 5% in 2021, something around 7% in 2022. And in terms of total domestic demand, people are suggesting that, again, this will be related in part to how the country fares in terms of the rollout of the vaccine. And after, we had declines of about 12% in 2020, import volumes are projected to grow by about 7.8 and 7.1%, respectively in 2021 and 2022. So, one of the things that I think that, those general numbers give us some indication that we should be getting ready. It becomes a question of timing. And I think from that perspective, what I'm seeing is that I think robust growth is likely only to be restored once the pandemic is clearly under control. And it becomes a timing question, which may in large part be related to vaccine rollouts. So if I think about this for an agricultural implement dealer in Western Canada, who may have a market in Eastern Europe, another in India that they think about serving, the likelihood is that there are going to be differences in how the pandemic is managed and the vaccine takes hold. And this may imply that you need different strategies and different timing to deal with different markets. Even within that same sector, this means different supply chain and trade management strategies that you need to start thinking about. The second thing is, even if the market recovery is forecasted to move forward, it'll be very uneven in Canada. So think just about the past year. Despite all of the concerns, look at the differences between, say, grain and potash and some of the manufacturing industries and what they had to deal with. We had a record year for grain movements in terms of how things moved. Just really, if you were to suggest that we'd been through this kind of pandemic and look just at the numbers for Canadian grain, you'd never know it. I think the same is true. My friends at Canpotex can remind me of the numbers, but I think in the discussions I was having with them, they were telling me that this may have been their second best year in history. So it really will be very industry specific in terms of the recovery, and it will have a lot to do with a couple of different factors that we can talk about more, but your markets that you're operating in and the timing related to whether you're a rich country that's doing well with vaccines or a poorer country that has less access may be one of the factors that we need to pay attention to. A third issue that I think we really need to be thoughtful about here has to do with the US approach to trade under President Biden. I referenced earlier that we had a bit of a shock to the system, and I think that's true of many countries in dealing with the change of direction that came under the Trump administration. But I think it's also important to appreciate and understand that this may not have been limited to just one administration. Although it may not take the form of what might be overtly called protectionism, a more worker-centered approach to the development of the trade economy in the United States, I think is something that we really need to look at for clues as to how things will evolve in the market with our largest trading customer. Many will know that President Biden's administration has already undertaken a 100-day supply chain review to look at a series of aspects of their supply chain, including investments in a variety of categories that include infrastructure, with the intent of improving the productivity of the U.S. economy in the trade space and of worker opportunities that comes with that. Finally, just wanted to mention kind of a closer to home example, and that would be the work that's been going on here domestically in terms of improving the competitiveness of Canadian trade corridors. One of the things that I've been very encouraged about is that the Council of Ministers of Transportation last month formally committed themselves, and this, as people probably know, includes all of the provincial, territorial governments and the federal government coming together to make a formal commitment to respond to opportunities and requirements to improve trade corridor competitiveness. And this is an issue that I think will be critical in terms of Canada's ability to realize the potential benefits associated with trade in the post-pandemic world. So just a few suggested areas where I think there may be important signals for us to get to. And I think the overall question of whether or not there is a greater degree of reshoring versus diversification of markets is also going to be an important policy question for us to keep an eye on in the days to come. So I'll stop there, Carlo, and hopefully we can get into more detailed discussion.
Well, thanks a lot, John. It's great to be able to share the conversations that you and I have on a daily, if not weekly basis. I would just note too, for those that are interested, on the more substantive policy framework or front, Canada West has been leading a national coalition to push on trade infrastructure, on corridor competitiveness, and that work is going to come to fruition this year, hopefully late spring, summer, into the fall. So stay tuned if you're interested in that. Now, let me bring in our partners for this event. We can get to the Q&A session. We think of these events as Western Canadian events more than Canada West events. The partners that we've reached out to, with whom we work with on a regular basis on trade, we've really tried to make this sort of a joint event, bringing in their wisdom, but also their insights and knowledge of their provincial jurisdictions to shape a conversation that's useful for everyone across the West and certainly across the prairies. So, Chris, after I go through the introductions, I'm going to hit you with the first question. But we have from Saskatchewan, the Saskatchewan Trade Export Partnership, Chris Dekker. From Edmonton Global, just up the road from us, Mustafa Sahin. And just down the street, Patrick Mattern from Calgary Economic Development. And from Winnipeg, who will launch a vigorous defense of the Blue Bombers holding the Grey Cup, Mariette Muller from the World Trade Center, Winnipeg. So if anyone else wants to jump in and butt Chris out with a question, feel free. But if not, we'll go Sasky to start things off.
Well, thank you, Carla, and thank you, John. Great to see you again, and thank you for your presentation and for your valuable insights and observations on supply chain vulnerability as a result of globalization. As you had pointed out, and Carlo has pointed out, Western Canada's economies are highly dependent on getting our goods to domestic and international markets, and much of it is landlocked. So by extension, we're dependent on export infrastructure. With rail and ports straining under increasing loads and access increasingly impaired by everything from labor issues to blockades and expanding pipelines coming under continued attack, it would seem prudent that we that we maximize our export infrastructure options. Now, this issue may be of more interest to my good friend Mariette and our colleagues in Manitoba, but it really does impact us all. And I wanted to get your thoughts on the reopened port of Churchill. Understandably, there are rail bed maintenance and weight issues to be resolved, but should more attention and perhaps capital be brought to this option?
Yeah, I've got sort of two takes on that, Chris. I think I reflect back on my days when I was still with the Saskatchewan government looking at the Port of Churchill, and I remember we partnered to some extent almost formally with the government of Manitoba around looking at the development of more of a central continent corridor that would go all the way up to the Port of Churchill, with particular opportunities attached for the movement of agricultural products and so forth. My sense is that the challenge here has always been, as you said, we know that there have been some underlying infrastructure issues associated with the rail bed, and the management of that, in my view, has been a scenario that has always required something incremental to get us across the threshold to make this work. I was excited to see that companies like AGT and Murad Al Khatib took an active role in sort of bringing some expertise to the table in terms of their experience in working with both Class 1 carriers, but also their own involvement with short line operators to understand how these things can be made to operate in the business and perhaps under a new business model. I think the challenge here really is to get to a place where we, like the rest of our infrastructure challenges, have figured out a way of really ensuring that we can make this a competitive alternative for the movement of goods and products. And I think this needs to be done as part of a broader regional approach. This isn't an issue, just as you've highlighted it, a Manitoba issue. This is really, I think, an issue that needs to be looked at regionally and nationally. And if we do that, I'm sure that we can identify the opportunities much more specifically to be able to advance the opportunities of Churchill.
All right, who would like to go next? Just who wants to jump in next?
I'll jump in, John. Why not? John, thank you very much. I'd like to build on the Chris's point about infrastructure and physical trade infrastructure. So when we talk about rail, we talk about roads, we talk about pipelines. When we look at the Canadian landscape, and you've touched on earlier supply chain vulnerability, do you see some significant bottlenecks that you think are most restrictive that could be addressed as low-hanging fruit, especially considering that we finally, and for the first time in a while, got a new federal Minister of Transport, and we've got a new head of the Canada Infrastructure Bank, which after 3 years of not really doing a lot, is there an opportunity to identify some low-hanging fruit? We're obviously bullish that TMX has even more impetus to continue going forward. Minister O'Regan keeps talking about it, especially in light of the Keystone XL decision by the US. But are there specific bottlenecks on the infrastructure side that you think now might be an opportune time to try and get addressed, where there's alignment between the feds and the provinces? And last point on that, especially given the fact that international air travel has been restricted, to which also impacts cargo capacity, where the only airport operating in the prairies that's got international flights operating right now is Calgary, right? So the rest of us don't have those international flights either. So for a whole bunch of reasons, I'll let you pick and choose where you think there might be some opportunities.
Yeah, this is, you've kind of jumped into the wheelhouse that Carlo and I have been working on for a long time. So thanks for that, Mustafa. I would say a couple of things. First of all, I think there's been some very good progress in terms of, the Canada did very well at this back about 2005. I've characterized it in this latest report that Carlo referred to as kind of the golden age of Canadian trade infrastructure, partly because there was a priority formally established for improving Canada's competitiveness in terms of our international movements of products and our trade opportunities based on our export-based economy. And one of the things that was done well at that time that I think we can build upon now and that I comment on in the report is that we had a very collaborative approach to the challenge of dealing with infrastructure. And I want to use an anecdote to highlight what you've described in terms of the opportunity. When Transport Canada started with the Asia Pacific Gateway and Corridor Initiative, which was really the first program nationally that was established with this particular trade export focus attached to it, one of the things that was done was that industry, provincial governments, federal government, were all brought to the table. And what happened in the initial identification of project opportunities by the federal government, I remember meeting with one of the senior officials shortly as the program was coming to an end, who characterized how they were able to work collaboratively as one of the key success factors, because the federal government would say, we're thinking about making an investment in this particular trade corridor for these reasons. And the private sector would show up and say, are you really planning to do this? Because if you are, we think that we would invest as well to take advantage of those improvements. And what the feds told me was, we learned so much from the private sector. There was just a different level of detail that came together when they brought their expertise to the table. There was, in effect, an alignment of interests. And ultimately, that became one of the measuring sticks for the federal program, where they looked at how federal money acted as a catalyst to attract more dollars. There were 3 or 4 major federal programs, all operating with a focus on improving trade corridors at that time. And if you look at, for example, the improvement of the national highway system, which was one of the programs that was introduced at that time, about $3 billion in federal money leveraged $25 billion of spending from industry and provinces across the country. I think that's what we need. And the reason that I use that as an example is that I see right now probably the best alignment of stakeholder interest across governments, industry, and even academia in terms of the arguments why this is so critical for us as a country with our trade-based economy. So I think it's absolutely the right thing to do. A real quick comment on which ones do we pick. One of the things that, and I don't know if they're on the call today, but I would give a lot of kudos to the folks at Westac who took the initiative as a result of feedback they had from their membership about the significance of trade corridor competitiveness to the operation of their own businesses, to go out and do one-on-one interviews to understand from industry what are the frontline issues that you are experiencing today, where are the priorities. And we took the initiative through Westac's work with Transport Canada to share a preliminary inventory of what some of those opportunities looked like, to find out that the federal government was doing some pretty good work as well in terms of trying to understand and develop their own regional transportation assessments of what priorities should be. Putting those two together, in my mind, the private sector expertise of operational experience, frontline experience in dealing with the progress that's being made in other jurisdictions that we can leverage, together with some of the policy work that the federal government and provincial governments are doing around capital priorities in their own regions, I think represents a real opportunity for us to make significant gains. And frankly, I think we don't have a choice but to take advantage of those. Carlo referenced our decline in the world trade rankings. I think many people will know that we were top 10 in 2010 in the world in terms of our trade infrastructure. We're currently 26th or 32nd, depending on which international indice you use. And this is manifesting itself in a lack of confidence amongst our trade partners that we can't get past. We're missing opportunities for investment and partnership because of it. So I think you're absolutely right on. And I think it would not take us long. In fact, I'm really hoping for a recapitalization of the National Trade Corridor Fund, because right now, with all of that money having been expended, there is currently no dedicated trade corridor or supply chain infrastructure program amongst the suite of $188 billion worth of federal programs. I think we could really use one, and I think it would have the same effect as it did in the earlier parts of the millennium when we were able to leverage additional dollars for improvements.
Yeah, that last recapitalization for the fund is the worst possible signal we could be sending to potential trade partners. And John just gave you a great preview of our coming report. But Mariette, you were jumping in next.
Well, I was actually jumping in after Chris, and he comes into my province. I know it's just because he still can't handle the fact that we're 2 years with the Grey Cup. 2 years, right? That's how we calculate it. Anyways, speaking of the inland ports, because I know we all share that, there's Centerport in Winnipeg, and it's been really growing a lot, John. And I'm just wondering if you can comment on the role that inland ports can play in our competitiveness as it relates to trade.
Yeah, I think this is a really a great example of kind of, the next level of important infrastructure to help facilitate supply chain or trade corridor movements on a national or regional basis. We've had the marine ports in Montreal, Halifax, Vancouver for some period of time, but we've always been challenged by how to deal with movements more proactively inland. As many of the people on the call will know, we've always been challenged to try and get access to containers. Anywhere inland is a big issue. And we understand the basic business economics that have people inclined to keep them at the ports and turn them around faster from ports as opposed to having them come inland. But when you create the kind of momentum that a Centerport does by attracting businesses that already bring containers to the market, you not only provide an important tool to help facilitate movements, but you do it in a way where you're not forced to pay extra money to get those movements there. If you've got containers coming into Centerport, local and regional companies can take advantage of the fact they don't have to pay the deadhead cost of getting them there. And now you've got essentially a movement that costs you, for sake of example, 50% to go in the other direction. In addition to that, the good work that's been done at Centerport by Diane and her team, I think represents a very important function that goes beyond just the movement of goods. I mean, the physical movement are important, but there's an intelligence function here that's really important, that people have a source of information about what's going on, about opportunities that can be leveraged, about companies that are doing business in different parts of the world and how they're connecting and how they can partner and how they can leverage one another. And I think this is one of the features of inland ports that has not been as well recognized. Diane and I spent a lot of time talking about this when I was working on the development of the Global Transportation Hub in Regina, and she on Centerport in Winnipeg. And a lot of people often used to say, gee, you guys must be in competition. But we came to understand, based on the information and intelligence around individual movements and target markets, that in fact, in very few instances were we competing with one another. We were dealing with very different logistics priorities and supply chain movements. And so understanding how those work, I think, is another really important part of what these facilities and these institutions can do. And I'm glad to see that they're continuing to prosper as you've described in your example of Centerport.
Yeah, it's definitely prospering. And thanks, John, for the showing the difference in the intellectual portion of that too, and how much we can learn from each other is key. So thanks.
The other inland ports too are the airports. So before getting to Patrick, at Canada West, we've modeled the impact of trade agreements on trade infrastructure. So not just modeling the economic impact of trade agreements, but we've done specific modeling on the impact of the agreements on our infrastructure. And with the TPP, one of the things that really jumped out from the results was the impact on airports. Some of the largest movements or the shifts in movements we saw were in airports. That work will be out after the trade infrastructure report that John and I are working on. But Patrick.
Carlo, I was just going to set you up on that airport one, because that's where my question is going as well. I mean, the international airports have been described as the routers of the 21st century. And certainly in the way of foreign direct investment, it is critical. And often one of the questions we receive is that connectivity for the movement of people, but more and more so cargo as well. And we saw that during the COVID, or currently during COVID. I'm curious of your views as to Canada's international airport position. We've seen a lot of support in the US for their airports and their airlines. What's your view on Canada going forward as far as their airport infrastructure is concerned?
Yeah, so I've got two thoughts, and I welcome others to kind of join in on this. Carlo and I have talked about this frequently. On the one side, I would say that if this is probably one of the biggest areas of worry that I see in terms of the current scenario with the pandemic. Just not only because it has a direct impact on the service side of our economy, where in the recent history of the growth of our air cargo opportunities, part of that has included us getting people as part of the service economy into different jurisdictions where they in effect bring the value of that part of the transaction to the table. Of course, we've been figuring out new ways through ICT to try and overcome some of those face-to-face opportunities that haven't been available to us through the pandemic. But even beyond that, the obvious challenge of what is about 12 or 13% of Canadian imports and exports being moved already by air, with reductions in passenger flights of up to 80 or 90%, you have to be concerned, because this is one of the first sort of immediate alternatives available to suppliers who, at least in terms of some categories, are able to look to this as an alternative to move products and services. So it's kind of a logical opportunity, and yet probably the most challenged in terms of impacts from the pandemic. The other side that I wanted to comment on was that in looking at some of the trends in terms of the competitiveness indexes that Carlo referred to on trade infrastructure, airports seemed to rate a little bit better than our roads, our ports, our rail, in the context of the quality of the infrastructure. The airports themselves were seen as being reasonably well positioned in terms of the market opportunities that were there. And yet we hadn't obviously taken full advantage of these. And I know that this is an area that across the West, we've talked about this, both in Calgary and Edmonton, but also in Winnipeg, that this is an area where we need to be much more thoughtful about how we can take advantage of that particular category. It is a significant part of what we do, and there are certain categories of what we produce that obviously are going to continue to grow if we have access to the appropriate availability of flights and transportation in the cargo holds of so many of those passenger aircraft.
I would also, one of the advantages we have over the Americans is in the component of trade that is the movement of people. So trade, movement of goods, movement of money, movement of information, movement of people. We tend to focus on movement of goods. But the modern trade agreements like the TPP give us huge advantages over the Americans to move investors, to move business people, to move technicians to service equipment, to move salespeople. So if you're looking at setting up a business in North America, we've got huge advantages in terms of being able to move key people, but that's contingent upon having the airport connections and also the government to take advantage of what we have. So the numbers that we've had from the modeling of the impact of the trade agreement on our trade infrastructure gives a quantitative window into the role of the airports as key enablers for trade, not just the Port of Vancouver, but YVR, the airport also. And hopefully the modeling and the numbers will be able to bring some light to what we've had somewhat anecdotally in terms of the importance. But yeah, for Saskatchewan though, it's constantly a worry of mine, having the capacity at the airports to make sure that we can continue to have all of the West take advantage of these opportunities.
Carlo, can I just build on that really quick with a question? We've laid this groundwork, sorry, Chris, that includes, trade is fundamentally starts with supply and demand, right? Market supplying and demanding of products. And then you overlay that with trade agreements. And as you both pointed out, we have this unique position of the combination of CPTPP, a new NAFTA, a CETA trade agreement, and a soon to be ratified new trade agreement with the UK, which makes us really unique. Then you've got the physical trade infrastructure. And then we've got, beyond just the airports, we have these FTZs, these special economic zones, these foreign trade zones, 15 of them in Canada now. And, you know, Centerport is one of the best examples of one running successfully. But ultimately, the devil is in the details, right? And for a lot of the small, medium enterprise companies, they don't know what that FTZ actually means. They don't know how to take advantage of it. They don't know how to market to a foreign company that would love to tap into the North American market by just importing products, doing some value-added processing here in one of our jurisdictions, and then re-exporting to the rest of North America, for example. How can we better explain that value proposition? How can we better lower the barriers to entry to make it easier for Canadian companies to take advantage of that table of variables that are existing today? Because it's a window of opportunity. We can't expect that the US will stay out of CPTPP forever, or that they won't negotiate something with Europe.
I'll start, Carlo, but keep it relatively brief. First of all, I think you've hit on a really key issue here, Mustafa, and it's not limited to just free trade zones. One of the things that I came across in some of the work I've done over the course of the last 2 years is that there have been a lot of organizations and working groups established to look at these questions of how we can get better at supply chains. In fact, some of the work that I was doing with Westhack about a year ago, we identified, I think, 12 to 15 different working groups across the country, primarily in Western Canada, that were focused on different questions around how to make some of these improvements. And one of the things I would say that I thought we could do a much better job of was simple communications. There were so many different aspects of work that were related to one another, where there was no apparent communication going on between the different groups that were invested in trying to make improvements, that I thought you could do simple things like create one-stop portals that would connect you to the various working groups that are currently engaged in providing this information. And in your example, this would be, I think, an ideal part of the process for SMEs to be able to take advantage of it. As I think I mentioned in my introduction, I've done 3 studies in Saskatchewan on a regional basis with SMEs. And amongst the most surprising findings for me was to learn how important the expansion of export markets was to the growth of SMEs. This is not a function just for large companies. This is a key feature of how they've grown. And in order for them to participate, there's no one voice out there speaking for SMEs as a group. And I think we could do a lot by way of making information and intelligence available that's already available by simply organizing and coordinating that information better. So I think that would be one of the great starting points for us to address the issue that you've just talked about.
It's also, I think, recognizing the nature of the challenge. This really is a devilish problem. We have success on the export front. We have people, firms that are exporting, that are making money, that are enabling our prosperity. But the opportunities are transitioning. So you have actors, large actors with large vested interests that need the attention of government, that need the attention of support services to continue. But you also have new opportunities in services, in new technologies, new manufacturing opportunities that don't have the same institutional or political weight. So we're dealing with transitions across the West. And this is a smaller question of another transition. How do we transition to the new economic opportunities without losing our bread and butter in the large scale movement of commodities and other things that we have? It's a devilish problem. And it's one without an easy answer. You don't want to cut off the current money. I mean, the demand for food, the demand for basic commodities is going to continue. We don't want to lose that. But at the same time, we have to think about transitioning to demand where there aren't enough businesses yelling and screaming yet because we haven't reached that critical weight. That's a philosophical issue, and I don't have practical solutions. But we are working on, with many of you, on new ways of getting information to SMEs, moving to more digital transmission of the process of you meeting SMEs. The Americans are putting information on trade support services online, a true one-stop shop where you can find information and services from Edmonton all the way up to everything that the feds find and everything in between. You can find information across ag and forestry and the trade ministry. So we have a plethora of export support services in Canada. Where we haven't done a good job and where the Americans and others are moving is making it idiot-proof for a small business to find these. You don't have to be an expert in trade support services. Ask a question, click in the search, and all the services come to you, is the point we should be. And that's one thing that we can do in Canada. And we've done some research and writing on that at Canada West. Who's next? Mariette. Then Patrick.
Am I stealing your question, Chris? I'm going to change gears here. Before COVID, the whole e-commerce and the impact on transportation. And now more and more, I know at the World Trade Center Winnipeg, we're providing a lot of different webinars on e-commerce, even with Amazon, the access to Amazon, because we work a lot with SMEs that are now finding that selling on Amazon is still a way of keeping the business alive. But that absolutely must have impact on the whole transportation. Can you comment on that, John, about this whole, and it's going to get more, I think, if you look into your crystal ball. I don't know. I think the impact of e-commerce on the whole transportation infrastructure is probably going to be huge. I don't know. What's your views?
This is an area that I feel is one that I need to get a lot smarter about, but I would share a little anecdote with you from my time when I was still in government and attending what was a relatively small group of senior executives from across the country that got together to talk about supply chain changes and improvements. And there was a very small group within our get together that I characterized as kind of the scientists of the group. And they used to have their own conversations. I had a hard time keeping up with even the language. But one of the things that had started to emerge in the dialogue was how people were rethinking supply chain movements on the basis of e-commerce thinking. And it was started at that point. It was sort of like, oh, that's a nice little, supplementary part to the equation. The impact of of COVID, I think this is one of the areas where it's going to be very interesting to see the extent to which, and don't get me wrong, I don't think the Amazons of the world are going anywhere. I think they're here to stay. The question in terms of how those will play into the relationships with our existing trade management strategies, I think is one that's still an unfolding story. So I'm inclined to defer to others on this, other than to say that I think there is a nexus within which we need to recognize that these are complementary, and we need to start thinking differently, for example, about how the activities in more densely urban areas of production fit in with those more diverse geographic considerations that we sometimes think about in terms of our more customary commodity movements, and understanding that those are going to intersect more and more as we move forward into the future.
In that same line, you talk about, and I think Bill Gates came out and said COVID is, everything is accelerated as a result of COVID, but the next big issue is climate change. And I'm really curious as to what impact you foresee as far as the transport infrastructure related to trade, given climate change is on the horizon.
Yeah, well, I'll make two comments. I know Carla will probably want to have at this one too, but the first thing I would say about this is that I think there is the issue is somewhat misconstrued when it comes to transportation. I think there's an inclination for a lot of people to assume that when we talk about climate change and the new green economy, that's exclusive of what we're talking about in our transportation environment. That these things, I think the starting point is to understand that there's a lot we can do better if we're smarter about how we do our transportation infrastructure. These are not mutually exclusive, whether it's reducing our carbon footprint by using different modes of transportation in different circumstances and optimizing what we do there. This is something that I think there's a huge opportunity. And I would tell you that in the outreach work that I've been fortunate enough to be a part of over the last couple of years, there is a significant number of Canadian businesses who are focusing in on this as an opportunity for them, not as part of their core business per se, but as how they're approaching business problems and the transportation issues associated with distribution of their products as something that they're addressing. And there are tremendous opportunities here. Like there's a whole inventory of things that can be done. And I think this is a really important message to get back to the federal government, who obviously are interested in making progress on this front. The transportation and the improvements that can be made there are not mutually exclusive from those opportunities in the green economy. The second thing I would tell you is that we've done a lot of work on best practices, looking at the work of other jurisdictions. And what almost all of them have done, and frankly, many of them are significantly ahead of us in terms of the work they've done in this space, is that they've incorporated environmental considerations into how they select projects, how they prioritize their improvements. And they've come up with some really good metrics and tool sets that we could, I think, take advantage of. We don't have to reinvent the wheel here. There's been some very good work done in this space on how to do transportation and trade infrastructure better from an environmental perspective. And these have been formally incorporated into the processes they use for decision-making and planning. So those are the two things I would highlight there. I think it's really important for people not to operate under the misapprehension that somehow if you're talking about investing in trade infrastructure, transportation infrastructure, that it can't be greener, smarter infrastructure improvements in the same way as we're looking to other technologies.
One thing that came out with the conversations with Australia and the UK in particular is it's not just environmental concerns, it's social justice concerns. So the unequal impact of decisions on transportation infrastructure, on GHG reduction, et cetera, on different populations, so marginalized, poor populations. When we had the conversation with them and we were asking about this, the response was, of course we do this. Doesn't everybody? So I think for those that have the progressive agenda and are worried about the trade infrastructure front, no, what we're learning from best practice is that these environmental and social concerns have been incorporated in jurisdictions that are succeeding, and our asking the question was kind of greeted with a head scratch, like, of course we do this, and of course it's serious. The other issue with the environment is with hydrogen. Great opportunities to think about using the advantages we have in the movement of goods within Canada. So long distance trucking, it doesn't make sense. It makes more sense for hydrogen than EVs. And can we build that out? The whole hydrogen opportunity, especially in the heartland up around Edmonton, requires thinking intensively about trade infrastructure to take advantage of opportunities that come with rising global demand. So there's a lot there. That's none of it's scary. I just see opportunity, 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 opportunity. Chris, you started us off.
Wow.
Take us out with the.
You want me to bring this home, Carlo?
Yes, please.
Well, just
home to Western Canada, not to.
Yeah. Well, and let me just say that we should leave on an optimistic note, and it's further to your notion, John, that we remain very bullish with respect to outlook for trade. In Saskatchewan last year, we had a 2.5% increase in total exports, one of the few provinces registering a positive increase in exports. And it was because of agriculture commodities, food ingredients, ag added value food, and its impact on the economy, not only in Saskatchewan, but in Western Canada, and indeed in infrastructure industry was phenomenal. I just attended a Port of Vancouver year-end in review presentation just a week ago, and they noted they had a 1% increase in cargo volume year to date. And which is no small miracle in itself. When you look at the details, they said they had an 18% decrease in auto volume, a 15% decrease in coal volume, and a 100% decrease in cruise activity. So where did it come from? a 28% increase in grain cargo, and an 11% increase in potash. So it really speaks to two things. One, that we remain very bullish and that this will continue, we believe, into next year. And the fact that the need to feed the world does not pause for pandemic. So we're in a good spot, and I think this will continue into the next year.
Bravo. Anyone else with final comments or thoughts?
Just one, Carlo, you touched on this, but John, one of the elephants in the room that we always forget about is what can we do to increase the pressure on political leaders to address the trade barriers within Canada, between provinces, and unlock all of that trade potential, which is within our own borders, right? And we know that we're a federation, and that's part of the challenge and the strength of, but I think it needs attention. I think it needs a voice. I think it needs some political awareness and pressure. That's one. And just to follow up on your hydrogen comment, Carlo, we recognize that that's obviously a big opportunity. We're going to be hosting our first webinar on export markets for hydrogen and Japan next week to talk about how we get it there. Ammonia is going to be a big part of that solution, at least in the short term, until we talk about future pipeline opportunities. I've heard whisperings that TMX might allow for a hydrogen pipeline as well in the future. But Canada, Western Canada are both aligned, fortunately, on wanting to get hydrogen to export markets over the next 10 to 20 to 30 years. But the movement of that good is going to be really important.
There is a True North forum that's being planned exactly for interprovincial trade. So if you want more information, World Trade Center Winnipeg is working with other players. So Derek Earl, my vice president, is definitely there for that. So yeah, we need that interprovincial trade talk.
Yeah, if Derek's running it, it's got to be good. On the interprovincial trade, there's also a larger national alliance working on this. So we have a national alliance with the Business Council and the Chamber on trade infrastructure, but the Business Council is running a national initiative on internal trade. So there's a lot of behind the scenes work happening there. So with that, let's, well, we're only 2 minutes over today. We'll give people 3 minutes of found time. So let's again join in thanking John Law, Senior Fellow at the Canada West Foundation, my partner in crime on trade infrastructure, for sharing with us today. Also thank our sponsor, Export Development Canada. And for those listening, if you have follow-up questions, I would urge you to contact EDC, contact STEP, contact Edmonton Global, contact the World Trade Center's Winnipeg, and contact Calgary Economic Development. Each of these groups has specific resources and staff that can help. I would also like to let you know that our final of these events will be with a really good friend of mine, our ambassador to Mexico, Graham Clark. Canada has privileged access to the Mexican market too, and we often forget about this. Everyone and their pet dog Fido has done an event on the new NAFTA and access to the US. But hey, our fifth largest trade partner, I think, looking at two-way trade, a country of 134 million people with a higher per capita GDP than China, is just on the other side of the US. So Graham is going to join us and give us some insights into what's happening with Mexico, what we can expect in terms of surprises in the year ahead, and what the opportunities and risks are down there. So again, I'd like to thank our partners, Chris Dekker, Saskatchewan Trade Export Partnership, Mustafa Sahan, Edmonton Global, Patrick Mattern with Calgary Economic Development, Mariette Muller at the World Trade Center Winnipeg, and our sponsor, Export Development Canada. Everyone, same time, roughly, next week, and Mexico to finish things off. Take care, be safe, and see you next week.
Thanks, John.
Pleasure, guys.
Thanks,
Nice
Carlo.
talking to you.
Thanks, John.
Okay, bye-bye now.
Take care.